Hello traders, what's up and welcome to this YouTube channel. I hope you all are faring well. So in this video, we'll be talking about how to draw trend lines. Many traders love using trend lines, which is a very good trading strategy, especially the trend line breakout strategy. These are good strategies that could be used to make a lot of money in the market. So now, how do you draw these trend lines properly to give you this good money in the market? There are a lot of simple mistakes that we'll talk about, and then we'll talk about how to draw these trend lines properly. So stick to the end of this video as we dive in. Okay, let's start by talking about how to draw a proper uptrend line. What is a trend line in the first place? A trend line is a manual indicator which helps to show the direction of the market. Now take note of the word manual. It means that the trader literally places this trend line on their chart to show them the direction of the market, right? So you want to get the right direction of the market by drawing your trend line in the right way. Before we get to how to draw the trend lines rightly, let's get to how not to draw them. The first way in which you're not supposed to draw your trend line is you're not supposed to draw your trend line like this, cutting through the bodies and wicks of candles. Very wrong. Imagine you cutting through the bodies and wicks of candles like this. What information are you going to get from this trend line? Now basically, an uptrend is made up of higher highs and higher lows, right? And as a trader, you want to get an uptrend from the lows. You want to get your entry from the lows of an uptrend so that you're going to be in that trend. If you do not know what the low of an uptrend is, this is the low of this trend. This is the low. We have another low here, another low here. All right, so these are the lows of this uptrend. Now the trend line is just a manual indicator that you place, expecting price to retrace back to the low, all right, so that you get an entry, right? So firstly, your trend line is not supposed to cut through the wicks and bodies of candles, because if your trend line cuts through the wicks of candles on bigger time frames, it's definitely cutting through the bodies of candles on smaller time frames, giving you wrong information. Now let's see how possible that is. Let's say this is the first part where we are cutting through this wick. All right, let me zoom out so you can see properly. We are cutting through this wick beneath, all right, to see how that plays out. And even though this trend line has been broken, let's bring it down to cut through this other wick, these other wicks here. Now let's move straight in or straight up to the 1 hour time frame to see how this works. Now look at this position where we cut through the wicks on the bigger time frame. On the 1 hour time frame, we are seeing that the bodies of candles have already cut through the trend line, which is not proper, right? Now it's okay for you to have a particular position where you say a candlestick has opened and closed above this trend line, now for you to understand the market properly. But I am against the idea of you cutting through the wicks of candles, especially on bigger time frames. The second error is your trend line should not have an interference between point 1 and point 2. Now for this trend, it's an uptrend. This is how we're going to properly draw it. All right, so because here we have the trend line breaking out, taking away this low here, all right, because we're experiencing higher highs and higher lows. So at this point, it's a deep breakout, taking away this low, and then we have a retest to this trend line. So we are expecting a downward move of this particular pair. But now from point A, this is point A, to point B, this is point B, there should be no obstruction. There should be no obstruction from point A to point B, all right? Because if there is an obstruction, let's say you're struggling to connect all the points, definitely you're going to have a trend line like this, which is not proper. So look for the most obvious touches from point A to point B, point A to point B, without any obstruction. All right, we move to the next error, which many traders make. Don't struggle to connect all the lows. We've already said that, right? Don't struggle to connect all the lows, especially for an uptrend. You're trying to connect this low, connect this low, connect this low, connect this low. No, look for the most obvious touches, and especially the ones that are leading to the direction of the trend, not cutting through wicks and candles. For this trend line, we are seeing that the trend line has already been broken, and we are looking for a downward movement of this trade because we are seeing this higher low here, which has been taken out, all right? Even though price is acting here on a support, but eventually if we have confirmations to move downward, we're going to enter, because this is a key level. This is a key level here, and this is a key level. We definitely have the breakout of this key level. So this is what we have here. So we have a break of structure here, and then price comes and taps into this key level, and then the price is currently at the support, or where the support turns resistance at this point. So we are going to look for further confirmations to sell or to keep buying. Now let's move to the next point, which talks about the trend line touching your zones at least twice or thrice before you have confirmations of your entry. So not saying that the trend line already just touched your zone once, let's say once like this, and then you're already ready to enter a buy for this trade. No, you must allow it touch at least twice or thrice. So here we have like the first touch, and then we have the second touch from here, which is very normal for you to enter from here. Why? Because basically from this zone, right, we have price coming down here towards the trend line. It doesn't reach the trend line, but what happens? It reaches another zone. Let's map this out. It reaches this resistance zone here. So definitely buyers, every buyer, every smart buyer would have been in the market by this time, get in here and take their profits at this particular zone. All right, so that is it. Now let's see how it is supposed to be for downtrends. Let's look at the sample for a downtrend. A downtrend, you want to be drawing your line connecting the highs of the downtrend. So you're connecting the highs of the downtrend. All right, so firstly, between point A and B, you want no obstruction. So this is point A and this is point B. You want no obstruction, and then from the third point, you're supposed to be entering your trade. Let's say you could be entering at this point. Now remember that you're not supposed to force the trend line to connect all the minimal points. You just want at least 3 or at least 2 valid touches for you to be in this trade. All right, let's say if you wanted to enter from the third touch, then here you go, you would have been here taking your profits at this zone. If you wanted to enter from the second touch, this is where you go, or sorry, this is where you go, because we have 1, 2, and then price consolidates to this level. It doesn't actually reach the trend line per se, but it reaches a key zone, which was a previous support zone. And then we are going to say that after some confirmation, let's say we waited for this support zone to get broken, this low to get broken, and this is exactly where we have the breakout of this zone. All right, from this bearish candle here. And if you're taking a trade, from there, you definitely place a trade like this, placing your stop loss at this level, having your stop loss above here. All right, and then you take profit right down. Let's say you're going to be getting like a 1:2 trade. Let's say you want to catch a 1:2 trade. This is definitely what you have, like 1:2. Good, and there you go, you have your TP hit. So as we were explaining, you want to mine, or you want to connect just the highs of a downtrend. All right, because you're expecting price to go to a resistance zone, then dump, climb to the resistance zone, dump, climb to the resistance zone, dump. So you wouldn't want to be cutting through the bodies and wicks of candles, else you're not going to get the right information. All right guys, so thank you for watching this video where we've talked about trend lines, how not to draw trend lines, or how to draw valid trend lines. All right, and how to use these trend lines to your advantage. And when you're analyzing using trend lines, you should still analyze using horizontal support and resistance. Mind you, you're looking for many reasons to being in a trade, many reasons that are going to grant you confidence to enter in a trade. So you don't want to just be taking a trade like a layman, all right, or you don't want to take a trade like a blind man. You want to have many reasons for entering that trade. All right, thank you for watching this video. Comment, like, subscribe to this YouTube channel where we would be explaining complex concepts to your understanding. Thank you and God bless you.